Disclaimer: this video is for educational purposes only. I am not a financial advisor, just a guy who has gotten lucky investing before. Past performance does not guarantee future results, and I'm just as good at losing money as I can make it. None of what you're about to see is financial advice. And today I am talking about a stock called ZIM Shipping Services. This is a Israeli-based shipping company. Currently, they're trading at $15.03 a share. And I want to go through talking about this company today. Shipping is out of my circle of competence. It is not something I am an expert at. And so I just want to preface and say that something I don't fully understand the machinations of, personally, I will not be investing in. And that's really what this whole video is about, and I hope to show you in this video that this stock, this company has performed very well in the past, and there's some things going on in the world that might bring this company a bad year or two. And I just want to get into first, the CEO has been in position for 8 years. He's done excellent things for the company. 95% approval rating from the employees of the company. And there are a lot of employees at ZIM. Again, when COO has been in their position for 10 years, CFO has been in position for 7 years. When I think of shipping companies, these are the three highest positions I could think of. Vice president is pretty important as well, but most of the senior management on ZIM's website, they're all there they've all been there for a very long time. And that's something you like to see with a company, is they're not moving around management, they're not having high turnover rates, and people like the CEO. And also, one of the higher rated companies to work for in the shipping company space, compared to other ones. Maersk is the biggest. They're a French-based shipping company. They own the most shipping routes in the world. They have a 4.0 rating. Matson is the biggest publicly traded U.S. Shipping company, maritime shipping company. They have a 4.0 rating, and Costco is a Chinese-based publicly traded shipping company, and they have a 3.8 rating. So, compared to other industry leaders, ZIM is a pretty good place to work for. The employees enjoy working for them. Translates to they want the company to succeed. Now, typically I don't care about what institutions own stocks and companies that I invest in. However, when I see Renaissance Technologies, if you don't know about Renaissance Technologies, they are Jim, I'm drawing a blank on his last name. He is one of the best quantitative analysts to ever live. Now, he's retired from Renaissance Technologies. He doesn't invest with them anymore. He doesn't make any decisions with them anymore. But he put together that team that is currently running Renaissance, and they know their stuff. When they buy a stock, they know what they're doing. And they're the biggest institutional holder of ZIM, as you can see by the chart here. Goldman Sachs, Arrow Street Capital, some other companies that funds that own significant portions of ZIM. Now, ZIM has a different business model than many of the other shipping companies out there, and they are very asset light. They don't own too many of their ships. They sign leases on their ships, or they charter their ships, which is a good thing if there is a big slump in shipping. However, when business is booming, they will have a harder time getting leases and getting charter contracts together. And also, this company holds a lot of debt. They just had 2021 and 2023 were huge years for the shipping industry as a whole. When you get into Maersk and Matson and Costco, they all published their revenues, and they had huge numbers in both 2021 and 2023. And when a company like that has a good year like that, they may want to pay off their debts, and they may want to hold cash. ZIM did not do that. They paid off huge dividends to their investors, which is very kind. It's very generous, right? But now, with global economics going the way that they are, there's a lot of pirates over and off the Gulf of Somalia, and the Houthis are targeting attacks on certain shipping companies, and especially ZIM being an Israeli-based company, they are a huge target for some of these attacks going on. The U.S. is going to be bringing in tariffs, and that's going to slow down some trades with some other countries and things like that. And so we have not had any reports since tariffs have really cranked into full gear. However, we have gotten, this is our only taste of what we can expect thus far. Enterprise Products is a different shipping company. They ship oil, crude oil, gasoline, and petrochemicals all through the world. They're a US-based company, and they reported that all of their revenues are up. Their business is doing great, except for one aspect of their business, and that is their maritime shipping volumes are down year over year. So, preceding 3 months to March 31st in 2024 to the preceding 3 months of March 31st, 2025, you can see that 0.3 drop in million pounds of million BPD. Some sort of unit. But regardless, that is a drop of 15%, right? Not a good sign. If that holds true, and I have the balance sheet of ZIM on, and I'll show this after we get through this next slide. If ZIM goes through that sort of issue, it's going to spell really bad things for the stock. Another thing to note in 2014, so ZIM has gone through the history of the company ever since the 90s, 1995. They were bought out, privatized, and then again made publicly traded in 2021. In 2014, ZIM Shipping Services underwent a major debt restructure to avoid a collapse of the company. They negotiated an agreement with creditors to convert that debt into ownership stake in ZIM, which left 32% of the company to the it was like some Israeli holding company that that lost their ownership. The CEO got fired. It was a huge mess. They have since fixed that issue. However, when considering debt in this company, it's gone south before, and it can again. And with that being said, revenue this year is forecast to drop 21%. Now that's just analyst expectations with their coming contracts and the hit from different global economic things. Noting also that their growth last year, over the last 5 years, has been up 11%, versus the overall industry is expected to drop 3.1% annually for this future. And this is my conclusion. I do want to, before I read this conclusion, I do want to get to my spreadsheet here. So this is the balance sheet. I rewrote it here. I also include their revenues for each year that they made, the overall profits that they made for each year, the cost of operating for that year, which is just the revenue subtracted by the profit, and then the translated earnings per share. You can see below that. And then the reflective stock price. Now, ZIM historically trades at a very, very low PE ratio, and I think it's because investors are scared of the liabilities and the debt that the company brings. You can see 2021 they went publicly traded. They went public with $3.6 billion, and they had $5.2 billion in liabilities and $9.8 billion in asset. Grew their asset, stagnated their debt, and bumped their revenue up to $12 billion. And then in 2023, $5 billion in revenue, and that's when their stock price dropped to 6.37. They're now trading at about $15. Again, 2024 was another booming year for them. They brought in $8,400 billion, $8,400 million, $8,427,000,000 in revenue, and their stock price went to $17.65. Now, their revenue is projected about 6,000 600, right? They also have signed, keep in mind that they have signed a contract to increase their fleet size in 2027. They're having new ships built, and they're going to charter them for 15 years, I believe, starting in 2027. So they're going to have to pay upfront costs for that in 2025. And that's going to be a significant operating cost. Also, they have grown their operating costs even through in 2023 when they had a down year. They had significant operating costs still. And if you have $6.5 billion in operating costs, and you only bring in $6.6 billion in revenue, you're going to have a profit of about 100 million, and your stock price, I mean, realistic, this is just based on a 0.5 PE ratio, which is historically pretty much what they have had pretty consistently. I don't think it's going to go down to $1, but you could get back to that $6.37 stock price range. Now, if the forecasts are wrong, and they bring in an extra $1 billion over the expected, you could see this stock stay at that, $12 range, $13 range. And if they have a repeat of last year, you could see a $20 stock price, right? And so, and then at the bottom, I have the cash left over for 2026. So, just some ideas when investing to be aware of is ZIM is going to have to bring in a lot of revenue just to stay afloat until 2026. And there are some things going on that might spell trouble in the rest of the world. They're holding a lot of debt and liabilities, and they're increasing their fleet size. It could spell bad news in the future, or I could be wrong. It could be good, and I like the company. I like the management. I like that this company's workforce likes working for them. I like that this company workforce believes in the CEO and the senior management of the company. 95% believe in the company. They are very generous to their shareholders on dividends, which could bite them in the butt. That is, I think, the biggest concern for me is, they paid $500 million or something out in dividends back in 2022 and 2023, and they really could have used it to pay off some of their liabilities and hoarded a little bit of cash. But Anywho, that is my short little video, 20-minute video on ZIM shipping services. I hope you appreciated it. And I didn't mention it at all at the bottom here. 2024, I just brought up Maersk's revenue, liabilities, cash holding, and then Matson. Like I said, the biggest U.S. publicly traded shipping company. Their revenue, liabilities, and cash held. But that's the end of this video. Hope you appreciate what I brought. ZIM is a significant player in the global shipping market. I think that it's a good company. Just at the current time, $15 is a lot to pay for the stock when it sounds like they're going to have a rough time ahead for them. And they have pretty crucial trade routes. They ship a lot of produce throughout the world, and I don't think they're going to go away. They've been in business for 80 years. There are some big money players that are not going to let this company fail, right? So that's my due diligence on ZIM. Thank you.